The three amigos are back. It's been a month. Oh my God. How you guys doing? How you doing, Dion?
I'm doing great. Next time, I think we need to record more before you take a trip like that.
Yeah, I just feel like I miss my friends. You're my boys.
Yeah.
Yeah. Matt, how are you?
I'm doing great. I'm glad you're back. I was like, I literally, when some of the videos came up, like the first week you were gone, I was like, when did we, what?
When did we do that?
When did we do that? And I was like, different title. I was like, oh, we already did that. It was a rehash. Whew. Now I know what syndication feels like. We're good. I'm good. I was like waiting for my 3-cent annuity in the mail.
There you go. There you go. Well, hey, one of the things that I was lucky enough to do while we were gone is I bounced around YouTube and I picked up a couple of new channels to look at. One of them that really struck me is Codie Sanchez.
Yeah.
I think I saw her on Pace Morby's channel once, but I didn't really know her.
Sure.
I now have watched many of her videos, and I think she offers a very unique perspective, given her background. She has a wonderful way of communicating.
Phenomenal.
I love her logic, right? It's something that kind of, I can follow. And I sent you guys a video where she basically went after Robert Kiyosaki.
Yeah.
And it did it in a nice way, of course. But I wanted to talk about this. So, as we all likely know, Robert Kiyosaki, Rich Dad, Poor Dad, I give him full credit to changing my thinking. But probably what he's most known for is the cash flow quadrant, right? You employee, small business owner, big business investor. So let's start there, because what Codie talks about is that's probably the wrong way to look at it. That's a very IRS way to look at it. I'll go to you first, Matt. What do you think about Robert Kiyosaki, the cash flow quadrant? How'd that hit you? Do you like it? Is it always felt off? Why don't we start there?
So never read the book. Never read any of his books. So my introduction to him was basically through others, right? So people look at who the standard is in the marketplace, and then they not try and poke holes, but they try and give alternative perspective. And so I'm a huge fan of hers. I believe 1,000% in what she's saying about, buying cash flow. I mean, that's what I do with my real estate, but that's what you can do in any type of business, is buy cash flow. You find those the boomers that are ready to retire and they want to walk away and they never even thought about selling their business. They're just like, well, yeah, I was just going to kind of close because none of the kids wanted to do it. Right. And so I just love her approach. But the fact that she would take on an icon like Kiyosaki, huge fan already.
Yeah, exactly. I punch it above your weight class. I like it.
Exactly. Why not go for the heavyweight? Yeah,
right. Walk in, punch him in the nose, see what happens.
But I love, I really kind of like the perspective. I think the thing that I most identify with what she said was really just understanding that next, so she wanted to take kind of the angle of that W-2 earners can't be rich or don't get wealthy. And right. I'll give her that's generally the case. She actually was saying, something like 50 out of 400. Well, I don't ever want to roll those odds. Yeah, those odds suck, right? So while she's correct, those aren't the odds I want to be playing with. If it's on the other side of it, where 348 out of 400 had done it, now I'm like, that's the number. That's the group.
I'll play those odds. Yeah.
Exactly. Yeah. But when you look at all those billionaires, right, that are on the Forbes top 400, and you look at those employees, kind of, it's a sort of maybe a bit. But again, I don't want to play in those small numbers. So while I like the fact that she went after Kiyosaki, I think she does it respectfully, and she's a phenomenal communicator. But I think and you guys know that if I didn't like her, I'd be the first one to tell you.
Oh yeah.
I would be like, that person
hide well.
Yeah, that person sucks. No, actually, I like her because I think she's giving people perspective that in order to carry over, there's many things that boomers own as businesses that need to continue tomorrow. Otherwise, our way of life will change. And I'd like to see a lot of boomers get exits, but let's face it, they've been great operators in their businesses for 40 years or 30 years or maybe 20 years. But many of them never really thought about, maybe I should look at an exit here. And could there be a better exit than seller financing on a business that you own, where you can also not have to work, but make yourself available for a year or two to pick up the phone and go, hey, I have a couple questions. I haven't seen this before. So yeah. So for me, I like what she had to say. Obviously I've worked through the path. I think what she did say that the only thing mistake or difference of opinion I think we have is it's not an either or thing. For me, I'm still 2, maybe 3 of them. And so I think that we'll call those diversified money channels. But yeah, I like kind of how she took it down. And I think if anybody wants to focus, you do want to move up the ladder. And I think she gave you a pretty clear path of what that looks like.
Yeah, and we'll give you her 4 quadrants in a minute. But
Sure.
Dion, when you think of Kiyosaki, Rich Dad Poor Dad, Cash Flow Quadrant, how did that hit you? Did it make sense? What did you think?
So I wasn't going to call Matt out on it, but he said he didn't read the book. About a year and a half ago, we did a video on the cash flow quadrant where Matt admitted he had never read the book. And we went over what they were to kind of explain those 4 quadrants. Yes. And so you sent this video. This is also a channel I was not familiar with. It's not somebody I'd seen before. I love taking something that a lot of people are familiar with and looking at it in a new angle. That's kind of my thing. So if I find somebody else who's doing the same thing, I love it. However,
she's wrong.
The reason I love Kiyosaki is his first 2 books. The reason I absolutely, and I'm going to say this publicly, I think he's an absolute blithering idiot when it comes to everything he's done in the last 10 years. End of the world, zombie apocalypse, literally stacking gold because he's going to buy ammunition, and like just all the things I hear on his show now, I can't listen.
Yeah.
But Cash Flow Quadrant, Rich Dad Poor Dad, I've shared that with hundreds of people. I've given away 50 plus of those books, right? Yeah. And I've talked about it on my channel because it's a really simple mindset shift. Mm-hmm. And so I like simple. When you sent this video and she started explaining, which you're going to get to, her quadrants, I thought, my immediate thought, Matt's going to love this. And my brain shut off.
Yeah.
It was.
No, agreed.
Right. So there are people out there who are analytical, and this is really going to benefit. So I don't want to say she did something wrong. What I want to say is I like simple. Simple is investors don't pay taxes. Everyone else is screwed. Like that's the cash flow quadrant, right? In a nutshell. But she has a thing Matt's going to love. Probably watched the video, probably took out a pen and paper and took notes and followed along. I couldn't.
Let's not get silly.
my brain wasn't that developed.
Yeah, and this is exactly why I sent the video, because again, I think one of Kiyosaki's gifts, and again, I will say in the first 2 books, he's kind of wacky the last decade or so.
Yeah.
But he's wacky at $300 million net worth. So
you get to be.
Yeah, you can do whatever the heck you want at that
eccentric
number, right?
When you're at 300 million.
You can afford lawyers to protect you at that number. Yes. But anyways, I digress. So the cash flow quadrant is easy. Mm-hmm. It makes sense, right? The net of it is investors don't pay taxes, the other do. It also is very cool because you can see yourself clearly moving, right? Employee, small business, big business, investor, right? That made sense to me. My analytical brain liked that. What I think Codie did, which I knew, but I think she said it so well, is she basically said the cash flow quadrant is how the IRS looks at getting their cut. Uh-huh. And I think she's 100% correct. Uh-huh. And I would even admit that I think Robert knew that when he was writing it. I think he wrote it that way. Where Codie's quadrant is interesting is you got to remember, if you don't know who Codie Sanchez is, Sanchez is, sorry, Codie. She's basically Wall Street trained. Yeah. She runs a private equity firm, company, whatever. She's pooling capital to go buy cash flow businesses. So her quadrant, I'll just do the left first, right? Which in Robert's world is employee, small business owner. So for Codie, it's spender, saver, general investor. And again, I get those, right? When I started, and probably until I was 30 years old, I was a spender and saver. I made money. I had a little left over. It went in a savings account. That was the extent. Maybe 401k for company match. And then she goes general investor. Okay, you've got a couple of raises, you got a little scratch on the side, you got your emergency fund, a la Dave Ramsey. Now let's go buy a stock, ETF, an index fund. Both of those kind of make sense to me. What do you think, Matt?
Yeah, I mean, I think, for me, it was pretty simple. It was, W-2 and then kind of investor that doesn't know what they're investing in, but they're investing, right? So they're like
they're
broad-based
investing because they
funds.
have to, right?
Exactly.
It's like, I was told I had to do this.
Yeah, exactly. You're like, you don't understand. I finally went from a job that didn't have a 401k. Now I have a job that does have a 401k and I'm going to invest. And so, yeah, I think that, for me, for the way that I look at things, yeah, it kind of nailed it for me. And it was, I've been both of those. I'm still one of those.
Yes, you are still one of those. But yeah, I think that felt really good to me. Dion, did those two quadrants kind of make sense to you?
The spender saver one did. That's generally how I think most people live.
I agree.
Even a person who's really bad with money will usually think, if I made more money, I could save more money. So their mindset is, I would save if I could, right? Even the ones who don't.
Yeah.
I don't follow the general investor kind of thing.
Fair.
I didn't.
Okay.
I don't see a group of people that I associate with that. Yeah. So I understood the first one.
Yeah. So that's wonderful. And that's why we have these conversations, right? For me, general investor made a lot of sense, because that was me pre-housing. It was like, oh, I got a little scratch. I got a commission check. I don't need this commission check right now. I've already got savings put aside. I'm going to go buy some stock. And that's how I turned $7,000 into whatever I turned it into, only to lose it. I was that person. So now she jumps. This is where I knew she would lose Dion. This is where I was like, because, we're boys, right? Where she went to calculated investor. And the one thing that hit me in that discussion was, she said that we can smell bullshit, right? We can smell meme stocks. It's like, this is a get rich quick. This is bullshit. This is, a Ponzi scheme, whatever you want to call it. And again, as someone who got there and can smell this stuff now, I'm like, yep. Right. You do this enough, you can kind of feel this. Dion, you want to say anything about that third upper right quadrant?
No, again, this is where I was
lost you. Yeah.
And it's literally, I mean, I wish Matt, do you have an Audible account? I'll buy you these books.
I don't want to read it. I refuse.
No, listen while you're doing something
Audible.
Because it's literally stories about when Robert was like 8 or 10, he was melting down lead to make nickels.
Yes.
He wanted to literally make money.
Make money.
I get simple. This was not simple. So I know there's an audience for it.
Yeah.
I'm not that audience.
Totally get it. Matt, how did that hit you, that upper right quadrant?
Yeah, I mean, I think I get it. It was, for me, that was probably the least applicable, I think, for me. The one that was most applicable was, I'm still a W-2, and then like general investor, but I was general investor. I would say I was a general investor for maybe a year in my life. And then it quickly turned to the bottom right quadrant for me.
Yeah.
It would quickly be like, I wasn't saving up to buy stuff. I was saving up to buy assets. Right. So for me, it was like rinse and repeat, super boring. No one really cared. And then they're like, oh, you own 4 houses. Yep. And it was, oh, you own 7. Oh, that's interesting. Yep. Now 13. Yep. Now 17. Yeah. And it's like one of those things where then you start to see the snowball, and then everyone starts to pay attention. They're like, well, I should have done, like, I met with somebody that I started on my journey about 6 months behind them. They're still on 1.
No,
they're still on 1.
Yeah. See, it's funny. You relate that to bottom right. I put you and I, because I'm still there in the upper right column. I think that's where we are. And let's play this out. Because again, the master allocator, where I knew Dion would be kind of, I'm out, not too hard. And why I've never gone there is, to me, that's the closest thing to syndication. What the bottom right was to me was, I am taking my experience, my stack, my pile, my experience, and I'm leveraging it with other people's money. And
It was probably just an aversion to the fact that she called that upper right-hand corner high school and then the lower right-hand corner PhD.
Yeah, you want to be a PhD. I get it. Well, when you never went to high school, you don't really know what high school's like.
There you go.
So.
Yeah. Well, I mean, that was kind of, I was going to say, I'm ill-equipped to answer.
Yeah, you have no experience.
Yeah, none.
Yeah,
but no, I think your point's dead on though, because I think that the way that I looked at it was I had the expertise and leveraged all of that. Didn't have, again, had the education, not the right kind, well, per se, but that's the one part that I really identify with what she said, which was taking that and doing something with it. And so that's what like my courses, that's what the time on YouTube is. It's then sharing that knowledge with other people, because sadly I made thousands of mistakes. Now you can listen to it and make some of those because you choose to, and make others because you decided to listen. So that's where that's where it kind of identified for me, because from the general perspective of just the great and powerful Oz, like, as you know, we've talked about it, syndication does nothing for me. I don't want to participate in them. I don't want to be one. No interest. I get offered money all the time now, and I'm like, no, thanks. Not interested.
I have a version.
Yeah.
And again, and I will always be smaller. We won't grow because we don't choose to do that, right? The ability to take your intellectual capital, your experience, your network, sprinkle it on $10 million of money that's not yours, and you get a 2 and 20 cut like they do on Wall Street.
Yeah.
That's some good living. I just choose not to have that headache, heartburn, stress. Dude, my life's good enough.
Yeah.
Right. I don't need more. Right. And maybe that's small thinking. Maybe I'm a moron or an idiot, but I don't see myself ever becoming a master allocator. Dion?
It's very rare to hear an investor say what you just said and what I've been saying for 6 months. Enough.
Yeah.
Right. There isn't enough. There are people who, no matter what they get to, what's the next thing?
Right.
And at some point, life is something you can enjoy.
Yeah. Yep. That was a big lesson for my trip, is joy. Yeah.
Yeah.
So bring us home, Matt. You can wrap us up.
I mean, I think that's a perspective that I think all three of us have, is that, Dion's thinking about downsizing, and Mike, you don't need to add any more properties. So you're like, do a project, have fun, and kind of do that. And
I'm Crash Bros wrong. That's why.
Exactly.
Crash Bros are going to hand me $100,000. It's going to be awesome.
And then, the optimization is where I'm at with my portfolio, and having bought as much as I bought in the last couple of years, we've stabilized. Now it's optimized, and we're optimizing. And so we've made some strategic moves in optimizing the portfolio. But yeah, I mean, we literally talked about it, I think last night. I said to Ashley, I go, I don't know that I want to buy much more.
No.
Like, even good deals have crossed my desk, and I'm just like,
What's the date? I want to write that down. Matt
said. It's March 1st. March 1st. It's not April 1st, but I will have a doozy. I will have a doozy for you that day. But yeah, I think at the end of the day, I think it's what we teach investors best is comfort in your own skin.
Yes, please. Absolutely.
That's what we teach best. What we teach best is Mike isn't going to be a self-manager. Yeah, but he's going to have an empire and run the empire and run spreadsheets better than anybody, manage teams better than anybody. Dion's more than happy with his corner of the world, and it propels the lifestyle that he wants to have the rest of his life. And me, after optimization's done, jury's out. We'll see what happens. But we all are comfortable with our spot, and we got to our spot. And this is what makes it, like, honestly, because there was one offer that came across my desk for me to syndicate, and it was a stop and think offer because it was a lot of money. And I just said, it doesn't feel good. It doesn't feel like I want it to feel. I want to listen. If I make mistakes right now, it's on me. It's 100% on my shoulders. It's my issues. I will take chances with my own money. I will take chances with my own assets. I will take chances with all of the stuff that I want to take chances with because it's on me. And I just don't feel comfortable doing that and speaking for somebody else in that regard, even though I have more expertise than they do. And it would probably turn out just fine. I like the little bit of sleep that I get at night, and I don't want to get any less.
There you go. Where can people find you, Matt?
Lumberjack Landlord on YouTube and on Instagram, and live streams on Sunday, 11:30 a.m. Eastern time, as always.
There you go. And Dion?
So I was looking up so I can get her name right. You sent me the link. I'm gonna watch the channel. I forgot her name because I'm mean.
Codie Sanchez.
And I guarantee she puts out content that I will like and I will understand.
Oh, absolutely. I think she's
great.
an amazing communicator. Just
she's
that
very good.
video.
As somebody who wants to help people that are like me, that are kind of simple and want the lazy way, that's kind of my niche. As a teacher, if you can't explain something simply, you don't understand it well enough to teach it. So the reason I gravitated towards Kiyosaki is I could take the cash flow quadrant, explain it to somebody who's never heard of it before in 50 words or less. I don't see that happening with this. So there's a market for it.
More complex.
It's not my market.
Sure.
That's my final thoughts. And you can find me, often being wrong, here on YouTube, Dion Talk Financial Freedom.
Thanks, guys.
Ciao.